Hello, guys. Welcome to another episode of the e-commerce lab by Ecomcy, the place of edit related to Amazon FBA private level and e-commerce. My name is Vincenzo Toscano, founder and CEO of Ecomcy, and today we bring another special guest. His name is Nadav, and he's the founder and CEO of CapEc, one of the top financing solutions out there to supporting sellers scale their business. And today, Nadav is going to give us an amazing presentation about how you can manage cash flow while increasing your return on investment. We know Amazon, in terms of selling on Amazon, is getting tougher, and understanding really cash flow is key. Like if you don't understand cash flow, that's where people start to struggle, and basically they're not able to scale the business to the next phase, right? And this presentation is going to be all around that. Like, what are the areas you need to tap into to effectively have that under control? So, Nadav, it's a pleasure to have you on the show today. So, thank you so much for coming. How you doing?
I'm doing good. Thank you, Vincento, for having me. It's been great to talk to everyone and explain what we do. I'm sure it'll be
Thank you.
very interesting and with a lot of insights.
Thank you. Thank you so much for being here. I know you have such an extensive experience as an entrepreneur as well. We met in Vegas and we have a brief conversation about this. So it would be great if you tell us a little bit about you and how essentially you went and found the CapEc. And then, of course, we can dive into the presentation. Yeah.
Sure. So personally, I've been an entrepreneur most of my life. I sold my first company in 2015. More, it
Cool.
was a high tech company. And since then, I've been doing e-commerce. Started my first Amazon store just like everyone else. Did an
Yeah.
online course, brought my first product,
Great.
and it blew me out of the market when I saw how fast you can grow your business in such a digital world.
Yeah.
And since then, I've been buying brands, managing brands. I have over 4 brands of my own today.
Cool.
And as we grew all the time meeting other sellers, we saw that I noticed that the biggest struggle is in
Mhm.
growth is bringing in inventory. You always run out of inventory, whether it's because you don't have enough money or you didn't plan the cash flow right or you didn't plan your purchases right, and that's always the biggest problem. And at the end of the day, when you're managing an Amazon store, about 80% of your capital is always stuck in inventory.
Yeah.
So that's basically what we do. We sell product. If we don't have product to sell, then obviously we can't grow our business.
Yeah.
So seeing that and seeing the different solutions that were out there, the digital and the e-commerce space is very unfamiliar for banks or any other financial institutions, and therefore there isn't a lot of solutions out there, and
Yes.
even the ones that are there don't really fit what we need because specifically the e-commerce space and even more private label sellers, manufacturers need a very unique solution for them.
Mhm.
Their cash flow is different, and if the solution doesn't fit exactly how they manage their business, then a lot of times those solutions even harm the business and not help the business. And
That's
that's
correct.
where we saw that it was a big problem and decided to create a solution. So we started CapEc a couple years ago. We've been helping hundreds of sellers grow their business. We're here to help growth. We're not a bank, we're not a financial institution. We don't just give you a line of credit or money. We actually come and partner with our sellers to bring our experience, our know-how, our expertise, and to give the finance that's needed to grow to bring in inventory and to grow the business.
Yeah, I think it's key. You mentioned there's something so important, which is, yeah, that the reality is that most of the solutions out there that have to do with traditional financing is not the right fit for most Amazon sellers. And I've seen that a couple of times with brands that we work with. Like, they take this line of credits from traditional banking, and the way the fees are structured and the timelines, like, sometimes can kill a business. Like, it's very dangerous. So that's why I'm so excited to see your presentation today, because I know you're going to basically break down how to get around this and how to use solution like CapEc to really navigate them the cash flow game. So what I'm going to do, It's gonna start bringing your presentation here on the screen. And for those hearing everything only on audio, please do make sure then you come back and watch the video version so you can get even more insights about this great presentation Nadav is gonna give us today. So yeah, Nadav, I think now the floor is yours.
Thank you. Okay, so yes, today we're going to talk about really the right type of financing, how you grow your business, how you get the full potential of your business and be able to triple and quadruple your sales every year without struggling with cash flow and increasing your ROI. Something very important. A lot of sellers are always looking at profits or
Hmm.
and what's the profitability. I don't feel that's the main important point. The main important point is how you create more return on investment, because
Correct.
there's profit per product, but at the end of the day, there's how much money you invested and how much money you got for that
Yes.
investment. And that's where you really make your money. So let's start. Understanding cash flow. You want to be able to create the right cash flow. Managing your cash flow is very, very important. I'm sure many of you, as business owners, it's happened to all of us, struggle with cash flow restraints, whether it's suddenly Amazon took more reserves and gave us less money, and we don't have enough to pay our employees. Or we did an
Hmm.
order with the manufacturer, and he finished within a month. Great, he finished fast, and we still don't have the enough to pay the 70% to release that inventory, or we don't even have enough to pay the shipping. This happens all the time. You don't have to be stressed about it. It happens to everyone, even to the best businesses, even to us. But the important thing is to learn from it, understand the different expenses that you have in your business, and creating the right cash flow to match those expenses. If you sit down and create the right Excel, understand what you're buying, when you have to pay your payments, in many cases, that'll relieve stress, help you have steady cash flow. And once you have steady cash flow, you can sleep at night and you can really concentrate on growth and expanding your business and not dealing with problems every day or just dealing with turning off fires. So that's where we want to get to. That's the point of these solutions that we're going to talk about. So creating steady cash flow will give you stressful businesses.
Yeah.
So cash flow is built as a seller. We have multiple expenses. One is operational and employee expenses. These are usually fixed costs every month. Your business has to be able to pay that, whether it's rent, your VAs, your software applications, all these fixed costs that you're paying on a monthly basis. That's a fixed amount that you need to know you have every month to pay. The other one is advertising. Advertising, I've heard multiple times people say, I don't have enough money for advertising. Advertising, in most cases, is a very fast ROI. I mean, you advertise today, you create a sale, you only pay for that advertising usually at the end of the month when Amazon charges it. If you can run it on your credit card and then you only pay it even a month later, and by then in most cases you got already repaid from Amazon. So even if you have negative advertising, the only expense that you have with advertising when it comes to ROI is the profit loss. If you're selling at a negative still because you're launching and you have to invest in it, which happens, it's still usually a very small amount that you're losing. So advertising, from what I feel, should not be something that you have expensive restraints for. I mean, you can get it from your credit card, you can get it just from Amazon where it gets taken off from the disbursements, but you should not save money on advertising, especially when it's a new product. You need to plan
Exactly.
your launch. You need to
Mm.
plan your launch. You need to know you're gonna have these expenses, and you need to put it in your cash flow. The biggest cash flow problem and the most amount of capital that we invest when running an e-commerce store is, of course, the inventory. If you're a
Yeah.
private label seller, purchasing inventory is going to be 80 to 90% of your capital invested in inventory. And when you invest in that inventory, the time frame of the payments and the ROI are very unique. So you need to really plan the cash flow very well so that you don't have any problems meeting the deadlines and the timelines that have to do with manufacturing inventory. And we'll talk about that in the next slides. So when you're managing inventory, you have multiple expenses that have to do with it. First of all, with most of us, we have to pay a deposit to the manufacturer the day we want to order our inventory. So if we're doing a $10,000 order right now, we usually have to give a 30% deposit, meaning $3,000 upfront. Other than that, then we have to pay the difference when it's ready, which can be a month or two, depending on the lead time to manufacture that product. Then we have to pay the shipping company. Sometimes it's immediately, same day to release the inventory. Sometimes you might pay while it's being shipped before it arrives to the port of the US or wherever you're shipping to. And then the hardest thing and then you start selling the product. Hopefully, if you bought the right amount of inventory, you sold that product within 4 to 6 months, which is a normal and good time frame. And so that's when you start making your ROI. So you're investing the
Sorry.
deposit, you invest the 70%, the shipping, and then 4 to 6 months to start getting it back.
Yeah.
Uh, so this is what you need to know, and this is what you need to plan for, and you'll start getting it back from Amazon also, about 2 to 3 weeks later. And don't forget, minus the reserves. Many times
Exactly.
I see
That's
this.
big.
I see my store is going great. I sold 3 times more, but Amazon
I
tripled
don't
my
get the money.
reserves. So so now I even
And
got less into my bank account than I got the month before that I wasn't
yeah,
selling more.
yeah.
So
And I think here, and I'm sure you agree, Nadav, like one of the key things maybe Amazon sellers don't do all the time is try to negotiate payment terms. Like sometimes you can come up with longer payment terms, and that's huge for cash flow, like getting extra time to pay back your supplier, if you have a good relationship, right?
that's extremely important.
Yeah,
Anything you can get from your supplier would be great. Better payment terms, less deposit when you're first starting off.
yeah,
Some suppliers might give you 60 to 90 days from when it's shipped. Uh, you want to try to get those payment terms. That's free money,
yeah.
and the beauty of our solution, at least, is that we connect to those payment terms. So
Nice.
anything you get from your supplier, you're gonna save money in fees when it comes to financing with us. Um, let's continue. So, as I mentioned, the different stages of managing inventory becomes even 3 times harder because when you're managing manufacturing, in most cases, you're going to have almost three orders in parallel. Because if
Mm,
you bought 3 to 4 months of inventory and it takes you at least 3 to 4 months to manufacture new inventory, in any given time, you're going to have a certain amount of inventory that's now being manufactured, and then the next batch is already being shipped to Amazon, and you're going to have a batch in Amazon. So you have to manage all these three different stages of purchase orders in parallel, and the cash flow that has to do with that. So it's obviously not that simple, and you need to know how much money you need, and hopefully you're growing. So now we bought 10,000 worth, we got it into
mhm.
Amazon, we're selling it. The next order is probably going to be 20,000. As soon as it's shipped out, we're already going to have to make another order of 40,000, hopefully. So this is the growth stage that you want to be in to be able to meet the demand and the time frame and the timelines that have to do with the time it takes to manufacture the product, get it into Amazon, and the connected cash flow that goes with those different orders. So it's very important to manage this, do very good inventory forecasting, understand your potential. It's also very important to do that to save money, because if you buy too much inventory and it sits in Amazon, we all know how expensive it is to store product in Amazon. You want to try to not have product in Amazon more than 3 to 4 months, ideally.
Correct. Yeah.
Also storing it in a 3PL, anywhere that you have product that is basically sitting on the shelf, you're paying money every month for that product. It's going to eat up from your profitability. So you want to try to be as efficient as possible, even make smaller orders that go directly to Amazon from China, but on a more frequent schedule, even every 2 months, make an order. Some
Mhm.
people say, hey, I don't want to be pressured. I'll order 6 months in advance, 9 months in advance.
Yeah.
Look, it might, you're going to have more capital stuck in that order, and you're going to be paying a lot more for the storage
Yes.
and the logistics of that. So if you can be efficient, you're going to save money. If you can't, that's still a way to work, but you just have to know
It has
you're
a
going to need,
price.
it has a price and you need more capital to do it.
Yeah.
Yes. Um, So creating ROI, as we mentioned before, the different stages when manufacturing product. Look, if you're an Amazon seller, ideally you should be selling your product at a times 3 to 5 multiple on your cost
Mhm.
of goods, minimum three. Average should be around 3.5, 4. So if you're buying a product for $10, you should be selling it $10. I mean, manufacturer costs, shipping cost, uh,
Landed. Yeah. Mhm.
landed, yeah, with the customs and everything, including landed in Amazon too, not landed in your 3PL.
Exactly. Important.
Yeah,
Yeah.
uh, including Amazon. If they did, if you sent it to one location and they charged you
Mhm.
the fee to spread it out, all those fees are part of your cost of goods, are part of your landed costs. You need to be familiar with it. You need to know exactly how much that product's costing you landed in Amazon. And then if it's landed at $10, you should be selling it for at least $35 to $40. Hopefully, if you're doing that, you should have a profit of about 20% on 35, meaning your net return on investment is going to be about $7 on the 10. So every time you sold a unit, hopefully you made $7 profit on your $10 investment, meaning you're making at least 70% ROI on
Yes.
your investment. So if I bought $10,000 worth of inventory, within 6 to 9 months from the day I ordered it, which includes the month or two for manufacturing, another month in the being shipped, and then the 4 to 6 months to sell that product, I should my $10,000 net should come back $17,000 in my bank
Mm.
account. So we're making 70% ROI on an investment, which is that's the beauty of Amazon. That's the beauty of selling directly from
Exactly.
manufacturer to consumer. You can make a 70% ROI. Most wholesalers that buy from a distributor and sell to consumers are making maybe 20 to 30% at best.
More. Yeah.
So that's what we all came in for. We learned private label, we learned to do this in order to really do manufacture to consumer and have these high ROIs. These high ROIs are important also because, as we know, things change all the time. Sometimes your product doesn't go as well. Advertising might be more expensive. So these ROIs also give us a buffer for error. If it
Mhm.
becomes hard, in many cases, even if you do a coupon, you need to get rid of your product, you can still
Correct.
get rid of it at a relatively good rate so that you're not going to lose a lot of money,
Yeah.
or even not lose money at all. So if you have a 70 to 100% ROI, that's great on the one hand. On the other hand, in Amazon, if you're growing well, we can triple and quadruple our sales within a year. But if we're only making 70 to 100% ROI every 6 to 9 months, at most we can double our capital in a year. And
Yeah.
as we mentioned before, you already have to make your second order and your third order before you sold the first order. So you
Yeah.
haven't even gotten the first ROI yet, and you need to now bring double the capital.
Yeah.
So
Super important. Yeah.
exactly.
And I
So
feel that's, to be honest, the reason, just to add a quick point here, that's the reason why most Amazon sellers at the beginning they struggle, because they see this a business model out there in some course, or some video, and they think that they only need the $5,000 to get started, but they don't factor in, the second batch, the third batch of inventory. And sometimes they have a very successful product, but they just didn't factor in, these cash flow issues they're going to encounter, that they have to up from the cash. And that's that when they're not able to, keep the growth of the business, and essentially dies the business.
yes, exactly. And Amazon is not forgiving when it comes to running out of inventory.
Yeah,
I mean,
that's it.
when you brought your product, you had your honeymoon period, your product selling well, you did reviews, you did advertising, and now
Hmm.
you're even in a good position on your organic sales, and you run out of inventory. Everything you just invested basically went out the window. So
Exactly.
so
Yeah.
running out of inventory and planning ahead, knowing that you're going to succeed, knowing that you're going to need the second batch and the third batch, and it's going to be at least double or triple the amount of inventory, you
Yeah.
need to plan that ahead, because that's where you're going for. None of us are bringing 2,000 units in order to sell
Just
2,000
to flip
units.
it. Yeah,
Yep.
exactly. Yeah.
We're bringing
Yeah.
the 2,000 units in order to get to the 10,000 units. So,
Hmm.
so you need to plan ahead the cash flow in order to do that. And I think that's the solution that we really wanted to help with, because when you have a good product and it's selling great, that's where we want to be there with you. We want to help you
Exactly.
grow because it's a successful product. So there's no
Hmm.
reason why you shouldn't get financing to build that product and to sell more of it. So
Yeah.
once you understand your ROI, you understand you basically we have very high profitability on our investments when it comes to private label selling and manufacturing. Therefore, even if we take some of that profit and use it for financing, we're going to be increasing our ROI, and I'll explain that in the next slides. Um, External capital. I mean, people, especially in the e-com space, a lot of the sellers came from traditional, usually employment,
Hmm.
less entrepreneur. And when you look at any other brick and mortar retail or large businesses, even Google, they have a share in stock in order to get money from other
Hmm.
people. So if you want to grow your business, everybody uses financing. You can't grow your business without it. There's no reason why you shouldn't use external financing. When you get financing, someone looked at your business, decided you're doing something right, decided he's gonna give you the money you need in order to grow your business, which already is a great mark that you're successful and you're doing it right. And when it comes to risk, at the end of the day, other people's money is less risk to you. So you
Yeah.
might make a little bit of a less profit because you're paying for this financing, but you have much less risk. And when you have to manage your risk as a business owner and try to get to growth, and when you're growing a business, even any business you can see today, the profit or making a little more profit or a little less profit when you're still in the growth stage is not that important. We want to
Exactly.
get to we want to get to the much revenue and as much sales as our product can go to. And once we've steadied out at a much higher level, then we can start tweaking the profitability. I
Hmm.
mean, obviously, if I'm bringing 3,000 units now a month, when I grow to bring 30,000 units a month, I'm going to get better pricing from my
Hmm.
manufacturer. I'm going
Yeah.
to get whole container shippings instead of LTLs. I'm going to get better payment terms maybe from my manufacturer. So that's when I'll start thinking about the profit. If on 3,000 units I'm making $5 or $4, that's not going to change my
It's
life or
not
make
gonna
a
change.
difference.
Yeah.
Exactly. But when
Hmm.
I get to 30,000 units, then I'll
Yeah.
be able to enjoy it much more, right?
Exactly.
So, so when you're in a growth stage, starting out your Amazon business, the most important thing is growing and growing and growing, being able to sell as much as possible, taking over more organic positioning in more keywords, and really creating a lot of revenue, a lot of sales. And it can come on less profitability. It's not as important the first year. That's when you're growing your business. Once you've reached the point of growth that you want to be in, especially for a specific skill, then you start tweaking the profitability. Uh, okay, so the advantages, like I said, of using external financing, you can optimize your cash flow, you can get a lot more financing, and it's important, very important, to use the right type of financing. Because when you use the right type of financing, then it really adds capital and it can optimize your cash flow and, of course, improve your ROI. Uh, We'll talk about the ROI, but before that, I want to explain what does it mean using the right type of financing. Because most of the solutions out there, even the Amazon funding, which they have now stopped doing, but Amazon or any of the are usually revenue financing, meaning they'll
Hmm.
look at your store, they'll say, hey, you're selling $10,000 a month. Yeah, we'll give you $10,000 for 6 months, 12 months, and we'll take it from your sales every month when you sell off product. So that's a way to get money. But when you look at the cash flow, it doesn't really help us much because if we're a manufacturer and we want to buy, we want to buy $100,000 worth of product and we only
Yeah.
have $30,000. If we took revenue financing, even if they gave us $100,000 now, already next month they're going to take off 15,000 from my sales, and the next month
Mm.
after that again, and the next month after that again. So before I even sold a single unit of what I went to order now from my manufacturer, I already had to pay back 4 months of revenue, meaning
Exactly.
I didn't
Hmm.
really get $100,000. I only got maybe 60 or $50,000 more because I already
Hmm.
had to pay. So cash flow wise, if I didn't even plan this ahead and thought I had $100,000 to buy inventory, I'm gonna find myself in a month and a half where I don't have the money to pay the 70%. I don't have the money to pay the shipping. Amazon's taking for my revenue every month or any other
Yeah.
finance out there, and now I'm even at more cash flow restraint than I was before. So, understanding the type of financing and connecting it exactly to your cash flow is the most important thing, and we see that all the time. And that's the unique product and offering that we give. We come and we partner with our sellers on their purchase orders, on their inventory financing. So if you want to buy $100,000 worth of inventory, we'll check your product, we'll check your sales, we'll check your history, and basically we'll approve the deal. And once we approve it, we'll tell you how much we're willing to finance, let's say 70%, and we partner with you. That means that you'll put in the 30% deposit knowing that we'll pay the 70% when the product's ready. So you don't have to
Hmm.
worry if it took a month, if it took 2 months, it doesn't matter. We'll pay the manufacturers directly when it's ready. We'll pay the shipping company when they need to be paid. And we only start getting payments back when it starts selling, when the product sells. So this allows you to really have stress-free cash flow, knowing you can buy inventory triple more, at least 3 times to 4 times more than what you can with your existing capital, and not
Yeah.
have to worry that you'll have problematic cash flow when taking
Payment every
this
month.
financing.
Yeah.
Exactly.
Yeah.
So here, if we look at an example, if you're investing 30%, if you have $30,000 and you're buying product now and you're selling it off and you're gonna make from that $30,000, as we mentioned before, 70 to 100%, you're gonna make between $20,000 to $30,000 of profit. Now
Okay.
with us, you basically can put that $30,000 down as a deposit. We'll put the 70%. We'll put the 70% when it needs to be paid and all that.
Yeah.
So you're gonna make now basically all the profit on $100,000. So the total profits are gonna be between 70 to $100,000. Our fees on the financing might be anywhere between 7 to 12%. So instead of making 70 to 100%, you're gonna make now 60 to 90% on what we finance. So basically,
Yeah.
we're taking 70% of the risk with
And
about
you're making the
10%
money.
profit,
Yeah.
and you're
Yeah.
making 60% profit on what we finance. So
Exactly.
you're gonna make $60,000 on your 30,000 investment. So
Yeah.
basically, your ROI now jumped from 70% to 200% on that
Mm-hmm.
same capital that you had to invest. So this is very important. It enables you to really grow your business, bring as much product as you need, make more ROI on your capital, and grow your business at a steady stress, which is
Yeah.
worth
What we
everything.
want.
Yeah. Um, like I said before, I really believe that when you're in a growth stage, the most important is maximizing your growth,
Yes.
using any scale you can take from partners, from financing, from other people to be able to bring as much inventory as needed and to grow that business as fast as possible. Amazon promotes fast growth. You make more sales, you get more organic positioning, and that's where you want to get to. Uh, so, just to summarize, I think we went through everything. I think it was very
Hmm.
uh, clear, and
Very
you
cool.
had great questions along the way, Vincenzo. Thank
Yeah.
you. Uh, so, effective cash flow, planning your cash flow, using the right type of financing that connects directly to your cash flow needs and connects directly to the ROI of your investments, meaning being able to pay when you need to pay and returning that money when you sell the product. It's the most important thing because sometimes sales might take longer with us.
Exactly.
If it goes if it takes longer, then we
That's
stretch
it.
out the return. You don't have to be stressed now to have to pay a financier from money you still didn't get because you haven't sold the product.
Yeah.
And as great partners with you, we have our experience. We help you out. I mean, at the end of the day, if something happens and your listing gets closed, we're 70% invested. You're only 30.
Exactly.
We're going to be
Yeah.
there to help you open that listing. We're going to be there to help you sell that product because if that product doesn't sell, that's our only collateral. We're not going to get our money back. So we're partners in that way, just like an equity partner is invested with you, except we don't get any equity. So,
It's yeah.
so it's
It's
a great,
pretty cool actually. I
yeah,
think to be honest, the thing I love about the way you explain everything is to showcase that at the end of the day, financing is definitely a powerful tool that I feel the reason why most people don't use it is because of the lack of knowledge about, first of all, how financing works, but second of all, it's also the unfortunately the bad stigma people have around financing and debt. They think having debt and financing is bad, and definitely not something that I should bring into the business. But you said that perfectly at the beginning of the webinar. It's like most businesses, in fact, all the huge businesses we see out there that we see on a daily basis, like Google, Apple, and so on, like they'll use financing to grow. Is the only way. And the fact that you think that you are not going to need financing to grow is naive sometimes, even after understanding all the complexity of timelines and everything. So it was pretty good to with examples that you gave, like how financing can change your return on investment like overnight. It's huge. Yeah.
yes, exactly.
Yeah.
And financing is, you're right about that stigma, and we see it all the time, especially with e-commerce, because
Yeah.
they don't have a lot of good solutions for e-commerce,
Exactly. That's the thing.
and a lot of
Yeah.
people who have taken the wrong type of financing
They
really
get
harm
burned.
their business. Yeah. And a
Yeah.
lot of times, most of the financing out there also, they take your credit checks, they take liability, so they go into your personal life. Here, we don't deal with that. We're just partners on that inventory specific, not even on the business. So you can safely know that if something happens, we don't affect your credit. We don't come to your take your home or anything like that.
Knock
We
the door.
basically, yep, we're just here with that inventory. We'll help you sell it if you get stuck. We'll take it over and sell it ourselves if needed with our experience. But
Awesome.
but the everybody needs financing, and you just need to find the right one. If you find the
Awesome.
right one, it's gonna grow your business and it's gonna help you succeed.
Cool. We have actually a couple of questions. So, by the way, everybody that is at the moment looking at the live stream, make sure to scan the QR code. If you want, Nadav, can you explain what is the QR code about so people can check it out?
Sure. So yeah, press the QR code. You'll get to our website. There's an online application that will pre-approve you for a certain amount of financing, and you can also set up a call with our sales manager, and he'll help you understand what's the next inventory that you want to buy. We're here to help you create your POs, give our experience and know-how of planning the right amount of inventory. And also, when you do the process with us, it's sort of an audit. A lot of times we'll
Nice.
come back to you and we'll tell you, hey, look, this product is not selling well, or you're
Mm-hmm.
not profitable because of your advertising costs are too high, your shipping costs are too high. We'll come back with feedback and tell you why or what's happening with a product. So you're gonna get good feedback from us. And of course, if it's approved, then we'll be able to finance you and buy inventory with you so that you can grow more. So this
Cool.
QR code will definitely help you, and we'll be glad to talk to you.
Awesome. So I'm gonna start bringing some of the questions here that I can
Oh, by the
see.
way, I'm sorry. One more
Go.
important thing
Yeah.
when it comes to working with us, we do need that you have a store that's been selling for at least 12 months, a product that has at least 6 months of history, and a PO of at least $10,000. So you have to have usually sales of around 15 to 20,000 a month. You're buying a PO of at least $10,000. If you meet those criterias, then great, we can help you, and then you can grow with us to seven figure and eight figure and grow your
And kill
business.
it.
Yep.
Awesome. So one of the questions we have here is, do you have any advice to know how to identify when financing is needed? Like, when do you think is the right moment based on your experience, Nadav, to know, okay, I need to bring financing into my business?
I believe if you're using the right type of financing, you should always bring financing. It
Mm,
lowers your personal risk. Even if you have enough money, to do it yourself, it still lowers your risk to be able to use financing in some way. Uh, just having that partner with you that already works with you, you might not need it for every order, but the fact that you're in a relationship with a finance partner, you know that suddenly your product's selling much faster and you want to make a big order, you're already set up, you're already familiar, you already know how he works. So it's easy for you to now get that product when you need it. And also, as long as you're growing, you're gonna need financing to grow the business.
yep.
So that's very important to use external financing, lowering risk. You should always have a finance partner at least on hand, ready for when you
Ready
need
to
it,
go. Yeah,
right?
cool. Now, we have another interesting question. This one is about, if my business is seasonal, how can I control cash flow?
For
Like, let's
seasonal
say you sell
businesses,
during specific times.
financers are the best. Yeah. I mean, using external, we have many businesses that use us only for Q4 because during the
Mm,
year they have pretty steady sales. They don't have fluctuality, so they don't need huge amount of inventory. But when you have a seasonal business and suddenly you have to bring times four, times 10 the inventory just for Q4, then financing is a great partner because that allows you to be able to bring as much product as you need instead of end up running out of inventory at the end of in mid-November or even at the
yeah,
beginning of November and losing all the Christmas season and all that.
exactly.
So
Cool.
yeah.
Nice. So we have time for another question. So this one's actually very interesting. So this one is about how important you feel pro prices is to improve cash flow. And actually, I get this question all the time because I've been getting this question lately. Like people say, "Oh, do you think to sell on Amazon nowadays you need a product that's at least over $20, $30, so you have enough margin to play with cash flow?" Like, is that something you also defend? Like, do you feel nowadays you need certain price bandwidth to really have a healthy cash flow, or you have seen people with very low pricing have a healthy cash flow?
Look, I don't think it has to do much with the cash flow. I mean, in general,
Mm,
dealing with smaller products usually have a small profit margin.
mm,
Not a small profit margin, but the profit per unit sold
mhm.
is usually a dollar or two, and then you
Yeah,
have to have a lot more volume. And managing volume is always much harder than
yeah,
managing less amount of product. So it's a strategic decision if you're dealing with, if you know you have a high volume product and you have the infrastructure and you know how to manage high volume product at a less amount, a less profit per sale, then great. But ideally, personally, I also like working more with products that sell between at a $40 minimum cost
mhm.
sale cost to $100. There's a lot more profitability and a lot more
A
profit per
margin for
unit.
error.
Exactly, margin for error, margin for investment. By the way, also what we talked about before, who needs financing? Why always? Because when you have, even when you use financing for your main products, you're going to free up capital that you can use now to
Mhm.
create more product, to in larger inventory, to launch new products. If all your
Yeah,
capital is always stuck with your existing product,
you don't grow.
you can't expand. Yeah.
Yeah, cool.
So I personally deal less with volume. I like the even the larger products. In fact, even when I have a lower cost product, which some of my brands do, I usually do bundles with larger packaging.
Nice.
So I still reach
Smart.
that higher that higher sales product.
Cool. So I think, yeah, Nadav, those are some of the questions. And to be honest, I think the presentation was amazing. Thank you so much for making something that sometimes is so difficult to grasp in terms of a concept, so simple in the way you convey the examples and everything. So for everybody watching and here, please do make sure to scan this QR code. Like as Nadav saying, financing is actually something that you need to scale your business, and especially in 2024, we we are seeing how competitive the landscape is getting. Like if your competitors are using financing and you're not, that sometimes can be the difference between you being the one that's scale within your category or actually become the loser within your category. So definitely check that out. And that, anything else you want to say so we close the webinar?
No, it was great being here. Thanks for having me. I'm always available. If someone wants to shoot me a
Yeah,
message to LinkedIn or anything, I'll be glad to help with my experience, just questions. And I hope we all continue to grow in the space. I agree it's become much harder, but I feel
yeah,
that this year is has started to steady up, and there is
exactly.
great potential to build your brand now strongly for next year,
Exactly.
and it's the
This
time
is
to
the
do
year
it.
that's gonna make the winners and the losers. So you need to make sure you ride the
Yeah,
wave. So then what is coming for sure is gonna be much better.
exactly.
So
Yes,
thank you, Nadav. Pleasure.
thank
And I'm
you.
gonna put everybody for those watching and listening all his information down in the description. In the meantime, it's been a pleasure to have you on the show. And yeah, have a nice one, Nadav. Yeah. Thank you so much for your time. Okay.
Thank you.